For that, have a good day. We'll touch base with you again later. Let's shift focus to the commodity markets now. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Sonia, a lot of positive cues coming in from the commodity space as well, but I'm looking at the crude oil prices because after that very weak start to the month of January, we've seen some support come in finally for the crude oil prices, but we are still trading below $80 per barrel. The support comes in from the fact that you are looking at the US dollar index just about holding 104 or trading below that. The US non-farm payroll data is what the markets are digesting right now, and the expectation that there is going to be a less aggressive US monetary tightening when the US Fed meets for the first time in 2023 for the month of Feb there. The markets also are looking at hopes of demand recovery in China. Remember, they have opened the Hong Kong border. Starting today, there is stimulus and liquidity injections that China has just about continued to do. That has been supportive. And then there is a report from Pierre Duran who says that the oil prices could exceed $140 a barrel in the second quarter, in this year rather, if Asia reopens fully. So that is one thing that the street is watching out for. But having said that, there's a big but there because global excess supply as of now stands at 1 million barrels per day. So the markets still are looking at that incremental demand to come back. Also, while China is buying crude, but they are storing it. So that's not a very good news, really. And they actually are exporting refined products out of the country. So within China, the domestic demand is still on the weaker side. And how much crude will China import? And will it start dipping into it? Will it buy it more? Are all the questions that the street is right now battling with. And when you look at the Russian Urals, well, they are being sold to China and India at $58 to $59 a barrel. Remember, the current Brent prices are trading at a $79 a barrel. So we are looking at a $20 discount here. And not just Russia. If you look at Saudi Arabia, they also have slashed their prices to 6-month lows to Asia and Europe as well. That tells you that the demand is on the weaker side, and many of these producers really are making effort to keep sending or selling their crude into the market there. Until time, we have seen a decline of 8% in 2023. 2022 did see 11% of a gain, and that was second straight year of gains into the market. But the street believes that first quarter of this year is going to be on the bearish side as the market looks at excess supply, weak manufacturing data, and the fact that Russia is selling at a deep discount.
Okay, thanks a lot for that. Well, let's slip into a short break. On the other side, Lata will connect with Samiran Chakraborty of Citi and Indranil Sengupta of CLSA India to discuss India's growth for 2023. After